Hey, welcome to The Explainer. So, let me ask you something. Have you ever had a fantastic export deal to Brazil? Everything's going great, you send the invoice, and then complete silence? Yeah, you're not alone. Today, we are cracking the code on the number one deal killer out there, Brazil's incredibly complex import taxes. We're going to show you exactly how they work and, more importantly, how to calculate a landed cost that won't make your buyer run for the hills.
Think about it. You've had all the right conversations. The buyer is totally on board. You send over your best price, and then just crickets. You're left wondering, what on earth just happened? Why does this happen so often when you're trying to sell into Brazil?
Well, here's the answer, and it's a really frustrating one. It's the hidden cost surprise. What happens is your Brazilian buyer gets your invoice, they start running the numbers on their end, and they discover that the final all-in landed cost is just astronomically higher than they ever expected. And just like that, the deal is dead on arrival.
So, let's get into it. We're going to break down exactly why these costs can spiral so far out of control, and really what you can actually do about it. Okay, the absolute heart of the issue is this. Brazil's tax system is layered. It's not like in other countries where you just pay a tax on your product's value. No. In Brazil, you pay a tax on the value, and then you pay another tax on top of that new, higher total. It's this compounding, snowballing effect that makes the final cost just explode.
So, to solve this puzzle, we've got to meet the key players, right? These are the main taxes you absolutely have to understand to even have a chance at estimating that final cost for your buyer.
First up, we have the II, which is short for Imposto de Importación. The easiest way to think about this one is as a standard federal import duty. Like a tariff you'd see anywhere else in the world. The rate for this isn't random. It depends completely on your product's specific classification code, which in Brazil is called the NCM.
Okay, next is the IPI, a federal excise tax. And boom, right away we see our first example of that crazy layering effect. The IPI isn't just calculated on your product's value. Oh no, it's calculated on the value plus the import duty you just paid. So the base for the second tax is already bigger than your product's price.
Then we've got PIS and COFINS. Now these are federal social contributions that get applied to imports. For a lot of goods, you'll hear people talk about a combined general rate of 11.75%. But you have to remember, this can definitely vary, so you've always got to verify it for your specific product. And finally, we get to the big one, ICMS. This is a state-level value-added tax, and honestly, it's almost always the largest and trickiest tax of the bunch. Why? Because its calculation base includes everything we just talked about: the product value, the freight, the insurance, the IPI, PIS, COFINS, the whole shebang. It even uses this wild gross-up method where the tax itself is included in its own calculation. It is the ultimate and most expensive layer.
Now, before your head starts spinning with all these acronyms, you need to know that they all build on one single foundation. If you can get this next concept right, the whole puzzle starts to make a lot more sense.
And that foundation is called the customs value, or valor aduanero in Portuguese. This is the starting line for almost every single tax calculation. And the formula is actually super simple. It's just the value of your goods plus the cost of international freight plus the cost of insurance. That's it. Get this number right and you're on the right track.
And this is exactly why your shipping terms, your Incoterms, are so incredibly critical. See, if you quote FOB, your buyer has to guess the freight and insurance costs. That means they're just guessing their tax base. But if you quote CIF, you're giving them the exact numbers they need. Your invoice value is the customs value. You're providing certainty, and that builds a ton of trust.
All right, deep breath. We know the key taxes. We know about the foundational customs value. So let's put it all together and actually walk through how a real-world calculation is done.
So, here's the roadmap. It's actually pretty logical. You start by figuring out that all-important customs value. Then you calculate each federal tax in order. First the II, then IPI, then PIS and COFINS. After that, you've got to tackle that big state tax, the ICMS. And finally, you add in any other little costs and sum it all up. Okay, let's make this real. Let's say your goods are worth $10,000. We'll add $700 for freight and another $100 for insurance. That gives us our starting point, a customs value of $10,800. Now, for this specific product, let's just say the EI rate is 14%, the IPI is 10%, and so on down the line.
So we apply that 14% ICD to our customs value, then we add that tax amount to the base before we apply the 10% IPI. We keep following that layered process for all the taxes. So, what's the final bill from the taxman? Are you ready for this? A staggering $7,264. That's just in taxes. So here's the kicker, the moment of truth. Your initial $10,000 product now has an estimated landed cost of over $18,000. And that's before you even add other things like port fees or customs brokerage. The value has nearly doubled. This right here is that hidden cost surprise in action. This is why those deals go silent.
So, doing the math is one thing, but how do you actually use this knowledge to build trust and, win the deal? Well, it all comes down to a few final crucial steps that let you quote like an absolute pro.
First, and I can't stress this enough, always confirm that NCM products code with your importer. Guessing is a recipe for disaster. Second, use the official tool. The Brazilian government, the Receita Federal, has an online simulator you can use to validate the tax rates. And third, just be transparent. Give them a landed cost estimate right in your quote. It shows you get it. You understand their world.
So, just to recap, let's run through the biggest landmines you need to avoid. Don't ever guess the NCM code. Don't use your FOB product value as the tax base. You have to add freight and insurance. Do not underestimate the complexity of that ICMS gross-up mechanic. And please, never assume there's just one single, simple tax rate for the entire country. It just doesn't exist.
And that brings us to the most important takeaway of all. A Brazil tax calculator isn't some magic fixed formula you can just plug numbers into. It is a repeatable process. And by mastering this process, you stop shocking your buyers with terrible news and you start building real trust. You're not just a seller anymore. You're a partner who's helping them navigate a really complex market. And that, my friends, is how you turn a massive deal breaker into your biggest competitive advantage.